It's Jay from Fruitful, and today I have a little video of how to trade options when it comes to earnings, especially when it comes to these, big stocks like Amazon or Shopify, Google, even companies like, these smaller companies that are having earnings this week. If we just go to earnings this week, we could take a look at what's going on. So today is Monday and the time is about 10:50, so we're a few hours into market. And today looks like kind of a red day. Things are selling off. My reasoning behind this is because these companies want to, get the lowest price possible, or these big traders, the whales that control the market, want to get the lowest price possible before earnings. They're shaking out the calls, they're shaking out the bag holders. For example, people that don't have the patience and realize that stuff like this happens. It's typical for stock prices to crash before earnings and then rally because, that's just how people make money. When it comes to earnings, today there's nothing crazy. Chegg is probably the only two big ones, Chegg and Alphabet, Google. Tomorrow we're going to be looking at Microsoft, AMD. Those are kind of the main ones that stick out to me here. On Wednesday, we have UPS, Fastly, Etsy, Sony, Teladoc. Some of these are big companies, eBay. And then Thursday, we have Apple, Shopify, Amazon, Facebook, Twitter. So those are obviously some big players, as well as Starbucks. And then Friday, nothing too crazy. But the reason I wanted to go over all of these is because you can use this method with every single one of these stocks that are on here that I mentioned. The ones that I mentioned specifically, obviously, are the ones that I believe have the most potential to make money. Maybe Spotify too, but we'll get right into the method. And this method is called doing call debit spreads. If any of you guys have heard of doing spreads before, this is essentially how I do it. So let's say I want to buy Amazon calls, but we can see here it's $100 per share. And when we go to check out, this $100 price is going to turn into $10,000 because one contract of an option is the right to buy or sell 100 shares. And so when we purchase one contract, it's the price multiplied by 100, and that's where we get this max cost. So if I want to buy Amazon calls, I got to dish out 10 grand. And we all know options. If those of us that have been trading options, if you don't really understand options, I would say this video is not for you. I'm going to be releasing more videos on basic options, as well as there's a lot of other resources on YouTube. This is for if you already know how to trade options and you know what you're doing. And so what we're going to be doing here is we want to buy these Amazon calls because we have a good prediction that this price is going to go up, right? Coronavirus, the prices have been, people have been ordering things on Amazon more than ever. Last quarter, they absolutely crushed it, guys. I mean, look, $10 per share. I mean, I'm thinking that you could see this same number, if not higher. And then even Q4, Christmas time, I mean, this shit is crazy, guys. This is a company that deserves a PE ratio of the 100, something like Tesla with 1,000 and 1,000s. I mean, I'm not saying Tesla's not a good company. I'm just saying that's a little high. Amazon deserves this 123 earnings ratio, And so now if we go to trade their options and I say, okay, I want to buy these calls, but I don't have 13, 15 grand to dish out and I don't want to risk that much. Well, how can I still make money with a smaller account? See how I only have $181 buying power? Well, through the beauty of spreads, with a small account of $180, I can buy Amazon calls and double up my money. I mean, that's great, right? And so over 100% return potential. And so what I do is I have to have spreads on Robinhood enabled, and then I sell a call and then I buy a call. And what this means essentially is I'm selling this call for $11,000, 300 or 113, and I'm buying this one for 115 or 11,500. So I'm selling this and getting credit for the 11,333, and then I'm buying the 15,520, which would cost $11,520, or now it fluctuated. I'm purchasing that, so I'm getting credit, and now I'm doing my debit spread. And so when I go to now purchase the buy call below my sell call, it comes out to a spread. And as you can see here, it's $2.10. Okay, so essentially, and so I'm gonna go ahead and put in an order. I only have $181 buying power, so I'm gonna type in 181 and just see if it hits, because these prices are always fluctuating during the day, so who knows. But we can see it's trading at around $2. Okay, and so if we go and do the math real quick, so how do I make money with spreads? Well, I make money with spreads essentially by if by November 6th Amazon is up to $3,300 or higher, which is a 3% increase. So if Amazon stock goes up 3% after earnings, then my $198 turns into $500. Where does this $500 come from? The $500 comes from the difference in the strike prices multiplied by 100. Remember, stock option is the right to buy or sell 100 shares at a specific date for a specific price, strike price. To get my max profit on a spread, I take my sell call subtracted by my buy call. In this case, it's $32.95. I get a total of $5. One contract is 100 shares. Max profit is $500. Currently, it's selling for $200. So if I subtract that by 200, I make a total profit of $300 on this trade by November 6th if Amazon closes 3% or higher at $3,300. Okay, so this max profit of $300 divided by my $200 initial price, I 1.5 times my money, or if we turn that into percentage, I made 150% return in a little over a week with this option strategy through the spreads. And so obviously there's some differences here between straight up just buying calls, and this is why I recommend spreads for people that are just starting to get into options versus just straight up buying calls or puts. The reasoning behind this is because options are extremely volatile. 90% of options expire out of the money, meaning 90% of options expire worthless. 90% of options traders lose their money. And so by doing a spread, you limit your risk and you maximize your profit. And the benefit of maximizing your profit is because it then gives you the ability to have an exit strategy. A lot of times people lose money with options because they don't have a stable exit strategy. They don't say, okay, when I make this amount of profit, I'm exiting the trade and I make money. The beauty of the spread is that Amazon price doesn't even have to get to your sell call for you to start making money. As Amazon stock starts to go up, your spread will start to increase in price, and eventually you'll be able to start making profit, 10, 20, 30, 40, 50% profit. You could already be up 50% profit in just the next couple days, and you could very well sell your spread to someone else who's willing to, if I purchase this at $1.80, somebody else might be willing to pay $3 for it a couple days from now. And then as we get closer to November 6th and the stock price is way up, people might be willing to pay $4, $4.50 for it. So it's you're not always going to get that max $5, $500, $5 option, but you're pretty guaranteed to get $400, $450. So this is still a great way to make 100% gain, double up your money trading options with a much less risk, because your price is going to be these margins. So even if the stock price crashes, the margins are still going to stay relatively the same. And so whereas if you just straight up bought a call or a YOLO call, if the stock price starts to crash, your call is going to go to shit and you're going to be down like 30, 40, 50%. That's why I always recommend a 15% to 25% stop loss on all my options. When I'm day trading my options, it's 5% stop loss. when it comes to these spreads, the margin is always going to be there. So your straight up call could be down 50%, but your spread might only be down 15%. So that just shows you that the spread is much less risk. It's also a little bit less reward, but that's not necessarily true because, I mean, when we look at some of these other spreads that I'm going to show you, there is a lot of opportunity to make money. And so if we do a different spread, like let's say we want to buy this $3,500 call, $3,550 call, but it's $4,000, right? I mean, we might not even have $4,000. So how can I make money? But let's say I have $1,000 and I want to, and I think that Amazon could go up, you know, around 10% easy after earnings. I mean, because they're going to crush it, right? More people buying the Rona stock market than on Amazon during the Rona than ever. So if I sell the 3,550 and I buy the 3,500, so now my strike price is 3,550. But as you can see here, it's $965. And so if we whip out the calculator, we'll just do the math on that. So here we have 3,550 subtracted from 3,500. My sell call subtracted from my buy call is $50 times 100. One contract is 100 shares. My max profit is $5,000. And to purchase this spread right now, it's $960. So if we subtract by 960, so we have 5,000 minus 960, we get 4040 for our max profit divided by what we paid for, call it 970, and we get multiplied by 100, we get a 416% return on our money, which is really good if you're just, even if you're just straight up buying options, a call to make 400% return. And so if you were buying this 3,500 call, even if I was just straight up buying this call for $5,000, I would say, hey, if I 4 times my money and turn it into $20,000, of course I'm going to sell it. That's really good, right? That's almost the best I could hope for. Well, this is giving you almost the same return that you would have made just straight up buying this call, this option, but you didn't have to dish out $4 or $5,000 for it. I only had to dish out $950, $1,000 for it. So this is a strategy that allows you to buy options that are expensive with a small account through the spreads. Okay, so I'm not gonna go over every single one of these companies, but maybe I'll just do like one more for you guys so you can get kind of an idea and see how this works for pretty much every company. So I'll just do like Shopify, for example, if it's gonna load. Let's see, there we go. And just real quick, just gonna plug the Discord. If you guys want to join this Discord, is free to join. You'll get access to this initial section, but if you want personal training, all of our live trades, our plays for the week. You know, we sent Snapchat puts this morning. They're doing absolutely wonderful. If we just want to look at them real quick. So the Snapchat puts, they're up about 8.6% since we purchased them. So that's pretty decent. And it's just $11 a month to enter this Discord. And so you would have already made your monthly fee right there. We also have the Wall of Gains, which is a lot of people who are making money in our group through our training. So if you're interested in purchasing our Fruitful Investing course, you can also, so the $11 a month gives you access to our Discord, all of our plays, basic training. If you want full one-on-one training into everything about stocks, check out our website, check out this course. I'm not gonna go over it too much today, but this will teach you the basics with paper trading, how to swing trade, analyze charts through technical analysis, intro to day trading options, elite options trading, and then the RSI Assassin day trading, which is our final level in the course, which is essentially day trading. And as you can see, our founder Juan, I mean, we're able to make, you know, 3, 4, 5, 6% every single day just through day trading. And the proof is here, as well as on our Twitter pages. If you want to check them out, you can. The proof is in the pudding. I'm not here to sell you anything. And we're just gonna head right back into the video, back to this Shopify. And so Shopify is releasing earnings on the 29th as well. Okay, and so it really depends on which one you want to do. I mean, you could open up spreads on all of these companies. It doesn't have to just be one, and that's the benefit. If you have $1,000 and you want to buy spreads, well, you could buy these smaller margin spreads, and we'll see that. So here we're at November 6th. I'm going to sell a call. I'm going to buy a call. So let's do like the 1030, something simple, 1030 to 1025. And so Shopify literally has to go up, not even a full percentage point. It has to go up like maybe, $10. What is that? That's 1%. That's not even a percent. Let's do this. That's about a percent. Yeah. So Shopify has to go up 1% post earnings. It's already gone up. It's been killing the earnings. It's been doing really well. And so here's a double up, right? We'll do the math real quick. $10.30 is our sell call, subtracted by $10.25, which is our buy call. We have a $5 max profit multiplied by 100. We have a $500 max profit on this trade. We're paying $230 for it, so subtract that $230 divided by our initial investment. That's our profit divided by our investment is 1.17 multiplied by 100 to get percentage. We have 117% gain on your money by November 6th if Shopify goes up 1%, okay? And so as you can see, I mean, spreads are pretty great, guys. Spreads are pretty great, and you can do this with calls. You can also do this with puts. I'll release more videos about doing it the other ways. There's so many ways to trade options than just buying calls, just buying puts. I mean, you can sell options, you can sell covered calls, covered puts. Those are all things that we'll get into in the future. I don't want to make this video too long, but I hope you guys have a great week trading. Stay smart, set stop losses, have an exit strategy. Always remember to smile. If you're not having fun trading in the market, then you need to take a break, because this is supposed to be enjoyable. This isn't supposed to be causing anxiety, stress. If that's causing these things for you, well, then that means you're gambling with money that you're not ready to lose. You're not in the financial situation to be gambling with this much money if that's the way you feel. And so you need to start paper trading with fake money. Start proving to yourself that you can actually make money with fake money first, because if you can make money in the live stock market, it doesn't matter if it's fake or real money. Just know this. So there's no rush. There's no rush to learn. A lot of people come to me and they say, should I buy your course? Should I join your group? I don't have a lot of money to trade with yet. And I say, yes, this is the best time to learn how to trade is when you don't have money, because then you're forced to use play money. And then by using the play money in paper trading, that's when you really learn how to trade. So you can learn how to trade with real money. You can learn how to trade with fake money. But the reality is you're going to have to pay tuition. AKA you're going to lose money when you first start trading. That's how you learn. That's how I learn. That's how every trader learns. Knowing this, you can learn the same lessons for free, paper trading, okay? So that's the last 2 cents I have for you guys. I hope you have a wonderful rest of your day. Smile. Remember, life is great, and happy trading.